What's going on, everybody? Welcome back to the EGA channel, where we plan to trade and trade the plan. That's right, we do the stock market breakdown for you so you don't have to do it yourself. It was once again a nice little session on the QQQ and the SPY for a very bullish action, perhaps the most bullish day in the entire week. We saw a bunch of rallies that we've been calling out for the past 2 weeks, setups that were fruited, and let's get into this daily brief so that we can break down this market and get it to you and get this down. So today on the daily brief, we had majority of tech moving up in a very bullish wave. Majority of the stocks that were leading the way were Apple, Amazon, Google, and a little bit of Netflix as well. Not to mention, Roku has now hit our targets, and I will be going through a little bit of the stocks that we've been watching for the past few weeks. A lot of the setups that we've been calling out on this daily brief have been paying and have been showing strength, and we hope that you have caught it with us because we've been here every step of the way to help you through this turbulent market. Now, on this continued expansion this week, we do see that valuations are starting to get a little stretched from where they were, and we want to make sure that we don't overextend ourselves into a rally that is uncertain. So let's break down these technicals without a frown and go downtown and peel this onion real quick. I hope you guys are having a great week, so let's get this down. So on the SPY ETF, we were talking about in the previous session how the 420 and 422 are the key levels to hold. We saw a nice break and a hold above 422 in the previous trading session, and this previous trading session definitely showed us that SPY has a lot of gas left in the tank. However, I wouldn't be so bullish just yet. We do know that this is a bull wave to the upside. However, we could still see a pullback down to the 416s, which is the previous support, before moving to the upside once again. I see this happening in AABCD wave, which is usually a wave down followed by a wave up and then another flush down to close out any stops that are along the way and create some liquidity to run to the upside. We know that majority of traders are actually short, net short in the S&P 500 with options volatility at a all-time low. So we know that a lot of traders are actually holding a lot of bearish positions on SPY, which is causing this short squeeze to the upside. What will happen is once those traders start to close out their short positions and they start to turn bullish, that will be a signal for SPY to come down before we can create some liquidity, some space down here, and then rally to the upside in the all-time high in sometime in July. So I'm not saying that we will go down right immediately. I think that this rally has a little bit of gas left in the tank, but we have to be cautious as these valuations and these waves are getting extremely bullish. And when we have a up wave that is as big as this one, we should have a small down wave before we can continue to the upside. So we do see 2 points at which this is more than likely to happen. The first one's going to be at the 420 support, which has been a very strong support in the past, and the second one's going to be at the 416 level, which is the 416 to 417 level. These will be the two levels to watch as SPY comes down, and we definitely recommend taking some out the money puts. We could take some 416 or 418 puts on SPY for a further expiration, not near expirations, but a further expiration, and have some downside protection to your long bullish positions. Remember that this is about managing your risk, and it's not about me being bearish on the market. It's far from that. In fact, I am extremely bullish on the market. The only difference is I like to hedge my downside so that if something goes wrong, I don't have a situation where my positions are not protected. Your hedged positions should pay out like an insurance contract, and you should be holding insurance contracts throughout the whole year as and when you please. Okay, so that goes for SPY. Of course, we are yet to hit the 61.8 extension, which is the obvious next level for us to go extend to. The 426 level is the level that we have tested before. This might be a double top scenario, it could be, but we will continue to break this down daily and give you updates as we see fit. Right now, there's a lot of risk that is stacked to the upside, so we do like taking the downside move here for protection. Remember that the overall trend is still bullish and the trend is your friend. So don't get overly bearish here. All we're talking about in this breakdown is that you should have hedged positions to the downside should something bad and terrible happen. And you can do that by taking out the money contracts, which don't cost a lot of money, for a further expiry. Great, so now let's break down QQQ to give you the deets. So with the QQQ, we had a break above the 61.8 and a hold above the 61.8. This has been an extremely bullish development. As you can see now, majority of the fashion show runway is pointing to technology holding the keys to this market. We have been calling this situation out for weeks on our Discord, our private community, and we have been alerting you guys along the way with stocks that have been in very, very key breakouts to tell you guys about this development. So if you have been following along, we definitely know that you have been making some decent money by following a lot of the things that we've been talking about on this channel. And we hope that you have, and congratulations if you actually have. The next stop for the QQQs are going to be about the 352 and the 356 levels, which are going to be the next natural resistance levels on the upside here. However, from this 61.8 extension, we have actually hit right on the nail with the 61.8 right here, and we need a pullback in order to continue to the upside. The natural levels for the QQQs to have a pullback to is going to be the 340s and the 334s, which are the bullish confirmation levels. We may see a pullback to grab liquidity just like SPY in these levels before continuing to the upside, if anything. As one earnings season is coming to a close, we will see the next earnings season come up, and therefore in this next earnings season we will expect some pullbacks and then another rally in the next coming weeks. So once again, we are still extremely bullish on the stock market, but remember to hedge your upside exposure. If you are too exposed to tech in particular, this is a time where you should de-lever your positions by not taking or closing them out, but by purchasing hedges to the downside. You can hold your upside exposure while purchasing out the money options for further expiry and hedge that upside with a downside position such as QQQ puts. One thing that we also do like to look at in this situation, and that was the breakdown of QQQ, is the VIX. The VIX is sitting at an all-time low position and hasn't been able to find a decent rally in this past couple of months. Therefore, we do like taking some longer-term debit spreads on VIX, which may pay out some 20 to 22 or 20 to 25 debit spreads, which may be nice strikes to aim for in the near future. Of course, we would like to take these as insurance contracts to the upside should volatility come back into the market or some developments happen with any downside exposure to SPY. Next up, we want to give you an update on Kweb, which is the Chinese ETF. We're seeing some considerable inflow today pre-market, and we also have been noticing that a lot of these stocks that are in the Chinese ETF have been seeing unusual options activity. Some of those stocks are JD, Baba, which is now in a key level for a breakout, and we will be giving you guys timely updates on those, but we are seeing some capital flows into Chinese equities once again as they start to bottom out in this little formation. We will be looking for a break above the $72 level on Kweb for a bullish reversal to the upside, and followed by nice waves to recover in this market that is down 30+% in this period. The same goes for ASHR, which is the mainland China ETF. We're seeing a nice bounce on this channel that was once bearish, and we are seeing some possible extensions into the $44 and $45 levels in the near future in the coming months. These are long swings, so don't expect to make profits on these right away. We expect this market to recover in the next couple of months. Next up is Netflix. This is a potential bullish opportunity that I'm going to tell you guys about right now. We were watching this on our watch list and we had called it out on Instagram. Yesterday it broke out with a very nice volume and momentum and is consolidating right above the channel. We expect a minor pullback to the bottom or the top of this channel at the 504 or 506 level, which is where we would like to gain entry into the upside into the 520 levels. This is a key level breakout and we will be watching this closely to take this to the upside. So make sure that you have your fingers on the trigger ready to take this trade to the upside. It could be a lagging trade that could catch up with the likes of ROKU and many other tech that have been rallying in recent days. Amazon with a nice little breakout and continued movement I did take a lotto position yesterday not yesterday, the day before on Amazon for some $3,600 calls for July 2nd week to play the Prime Day sales. Yesterday, unfortunately, I got stopped out, and I may be looking to enter that contract again if I can get it at a cheaper price today. Perhaps on a pullback on QQQ, I may be inclined to play Amazon to the upside. Next up is JD, which has now made two-wave confirmation above a demand zone. We are seeing this as a decent entry at the $72 to $73 level to play to the upside into the $80. I already have a starter position in this one, and I wanted to alert you guys on this potential opportunity as we see flows into the Chinese ETFs. ROKU with a unbelievable run in these past 2 days, hitting both our 23.6 and 38.2 Fibonacci extensions, and might even go for the 430s at the 61.8. We do obviously need a pullback of some kind, which will more than likely be at the 380s or 370s and 360s before running to the upside once again. This wave was a huge wave up, so don't be going and chasing this wave up to the upside, but rather wait for it to come back down so that you can consolidate and find liquidity before moving to the upside again. If it does move up to the 61.8 right away, today or tomorrow, I am going to be extremely surprised with this one. And last up, I want to update you guys on is Apple, which is now approaching our second take profit. We have been calling out Apple for multiple weeks on this channel, and if you have played this one successfully, that position is now at least 30% up. So congratulations if you played this one. We will be starting to exit our positions the moment that we enter the 134.50 level, because we want to exit ahead of everybody who's going to try and exit at the 135 and 136. Therefore, remember to lock in your profits, and if you want to hold your position till the end of the year, feel free to do so and move your take profit up by setting a stop loss that is in the money. So that's all we have for you guys today. And remember that if you enjoy watching these videos and you have genuinely liked these videos, please drop a like and subscribe to our channel if you haven't yet done it. We do these daily market breakdowns for you so you don't have to do it yourself, and we truly enjoy them. So we hope that you enjoy it as much as us. Let's get this market concluded so that we can get done with today. So on the stock market, we had a strong rally that was driven by tech and a rotation out of Dow stocks. Financials took a hit, and a needed correction in energy along with financials caused capital to shift into technology once again. This is a reverse completely from the past couple of months, which have seen industrials and financials lead the way for the market cycles that we've been looking at. So right now, the trend that is in is tech stocks, and we should continue to press it till that trend starts to fade away. However, remember that we remain cautiously bullish, and we will be initiating short positions on this market as soon as I see this market start to show signs of overheating. I will be doing that by either taking short positions on SPY and QQQ, which are going to be out the money, or I will be taking long positions in the VIX. So all in all, make sure that you manage your risk and have a safe trading session. Till tomorrow, guys, enjoy your day, and I'll see y'all again. Take care. Bye-bye.